Hey everyone, welcome back. Most people think about sales tax when they hear Texas Comptroller audit, but franchise tax reviews are more common than you might think. Today, let's talk about what the comptroller is actually looking for when they examine your franchise tax filings. First, they're checking whether you filed at all. A surprising number of Texas businesses either don't know they have a franchise tax filing obligation or assume that because they fall below the no tax due threshold, they don't need to file anything. That's wrong. Even if you owe $0, you still have to file the report. Failure to file is one of the fastest ways to end up in the comptroller's crosshairs. Second, they're looking at your revenue calculation. The franchise tax is based on your total revenue, and how you calculate that number matters. The comptroller will review whether you use the right method, whether your deductions are valid, and whether your revenue figures match up with your federal return. Discrepancies between your federal filing and your franchise tax report are a very common audit trigger. Third, they're checking your entity classification. Different entity types have different franchise tax rules. LLCs, corporations, partnerships, and professional associations are all treated differently. The comptroller wants to make sure you're filing under the correct classification and using the right calculation method for your entity type. Fourth, they're reviewing your apportionment. If your business operates in multiple states, you apportion your revenue to Texas based on where the sales occur. The comptroller will scrutinize how you're sourcing your revenue and whether your apportionment formula is correct. Fifth, they're looking for related party transactions. If your business has transactions with affiliated entities, the comptroller may examine whether those transactions are structured to reduce your Texas tax liability. This is an area where they pay very close attention. The good news is that franchise tax reviews tend to be less adversarial than sales tax audits, but they can still result in significant assessments if your filings were off. If you received a franchise tax review notice, call your tax professional who can evaluate your filings and help you respond. As always, make sure you're getting advice tailored to your specific facts and circumstances. Thanks for watching.